Well, good afternoon, everybody, and thanks for joining our webinar. I'm Jessica Groskopf, an extension educator at the University of Nebraska-Lincoln. Today is a part of the Center for Agri-Profitability's weekly webinar series, which usually happens every Thursday at noon Central Time. A full schedule is available at our website at cap.unl.edu. Today, we will look at the projected input costs and commodity prices to prepare for 2022's production season amid the price volatility that we continue to experience. We'll cover how soil test results can help set fertilizer application priorities and how customizing crop budgets can help you know your cost of production and inform your 2022 marketing strategies. Presenting with me today is Aaron Nygren, a cropping systems educator with Nebraska Extension. Hey, Aaron.
Hello.
Glennis McClure, a farm and range management analyst on UNL's East Campus.
Yes, hi Jessica and everyone.
And Cory Walters, an extension grain marketing specialist and associate professor in the Department of Agricultural Economics. Hi, Cory.
Hi, Jessica.
So we are going to get started on today's presentation, and we're going to set the stage a little bit. And I think it's really important to think about the fact that nobody really knows what's going on in terms of where the market's actually going to end up. And so although there might be some similarities to me with the image on your screen, we don't really know. We can't really predict exactly how this market is going to play out. So if you've been watching, particularly fertilizer prices, you've probably seen a chart similar to the one on your screen that shows that we are seeing a rise in fertilizer prices. And that can be concerning when we start to make decisions looking into the 2022 growing season. And we've seen our friends in the media really emphasizing this fertilizer shortage, but they aren't really providing at this point solutions to how we need to manage that. So how did we get where we are? And one of the things that we need to think about is the fact that the US is the largest importer of fertilizers in the world. We import approximately 25 to 40% of our nitrogen, 15 to 40% of our phosphorus, and nearly all of our potassium. These products come from all over the world. If we look at nitrogen, we see Russia and Canada as our top trade partners. P, we look at Israel and Morocco. And then K, we're looking at, again, Canada and Russia. Now, there's one country that's potentially missing on this list who's a very large exporter, and that's China. And even though we don't trade fertilizer with China right now, they still are a big player in impacting the global fertilizer market. So one of the things that's causing some of the issues that we're facing is that both China and Russia are limiting their exports. And we see that China is going to ban their phosphate and urea exports until June of next year. And we see other challenges with natural gas prices, which is part of why Russia is limiting their exports. We've also seen damage caused by Hurricane Ida. And then, of course, the challenges that have arose related to transportation and freight. So thinking forward, the question becomes, this is the market that we're facing. This is the cost structure that we're facing. And so how do we move forward? And I think one of the most important things is to think about and to get back to considering profit. So remember that profit is made of both income and costs. And at this time, we are seeing that both the commodity prices as well as fertilizer prices are both higher. And we need to keep that framework in mind as we move forward. So to think about costs and income together, one thing with that I would like to share with you really briefly is a different way to think about fertilizer prices, maybe than some of the charts that we've been seeing. So what we've been doing is looking at current fertilizer prices at the New Orleans port for urea, looking at how many units of nitrogen per acre we are going to apply. Typically, this is less than 1.2 units per expected bushel of production. And then we need to make sure that we're looking at the new crop commodity prices. So for corn, I'll be showing the December 2022 prices. And what we're going to come up with is a number of bushels to cover the per acre nitrogen costs. So just to show you an example here, here's the calculation, and I show 2021 next to 2022. So what we did was we took the price of urea, calculated the dollar per pound of nitrogen. You guys are calling your fertilizer suppliers and getting this number. And then we have to estimate the units of nitrogen that we're going to apply per acre and calculate basically that cost per acre of nitrogen and divide it then by the December corn price. So that gives us a relationship. In 2021, this relationship was closer to 7.5 bushels per acre. Today, it's closer to 17 bushels per acre. So as we look at this, I'd like to point out that we've actually seen this relationship before. And so we're experiencing, yes, we're experiencing higher nitrogen prices, but we're also experiencing higher commodity prices. Now, there's a couple challenges with this calculation. And the first is that we're taking the price of nitrogen at the port. So we still need to add in transportation costs to get it to your field. And so you're probably experiencing a higher dollar per unit of nitrogen costs than what I'm exhibiting on the screen. And then the second thing is looking and utilizing local, looking at local new crop prices. So I'm going to pull up an Excel file. I'm going to encourage you, if you could in the chat, if you'd go ahead and just throw out some dollar per unit of nitrogen costs that you have been quoted, and I will show this calculation with those transportation, and I'll throw in the local Scottsbluff nearby cash price, or excuse me, new crop cash price, so we can look at that. So let's go to that spreadsheet. I'm going to open the chat. Again, if you want to go ahead and throw in the chat what the dollar per pound of nitrogen that you have been quoted recently, we'd really appreciate that. So I'm seeing, here's one, $1.07 per unit of nitrogen. So again, really simple calculation. And I think it's important that you can do this on your own. So take that dollar per pound of nitrogen times the units of nitrogen applied, and then check out your local price. So today, new crop for Scottsbluff, Nebraska is $5.31. So presumably, I'm using that first 30 bushels of production then to pay, or 30 bushels of my production to pay for nitrogen at that rate. Last week, we did a few of these meetings across the state, and we heard about 95 cents per unit. So again, this relationship is going to vary depending on the price you're able to receive in terms of cost of nitrogen, and then whatever you're able to lock in for your new crop corn price. So I think one thing that's really important as we're making these decisions is that this is not a binary yes or no. Should I buy fertilizer prices or should I not? And what I really want you to think about is building a fertilizer cost. So Aaron and others are going to talk about utilizing UNL's nitrogen calculator to look at what our fields actually look like, and then potentially maybe locking in groups of nitrogen based on what we can get it priced at, whether that's manure or somewhere else. So please do not take this as yes or no, I should be purchasing nitrogen at these prices. There's a lot of variation and a lot of things that can happen as we enter the 2022 production season, and each individual operation is going to have to make that decision for themselves. So just a couple of recommendations as we try to think about this process. And really we're talking about navigating uncertain financial times. And here's 4 just really good things to think about as we navigate into 2022. And the first is to look at your commodity marketing plans. I think as we look at input prices at this level, we also need to be matching that with a commodity marketing plan that allows us to capture some of the prices and the price relationship that currently exists. And again, we're going to make these sales throughout the year, throughout the 2022 year. And so we're just going to have to be really conscious of where are my input costs and where am I at from a commodity marketing perspective. Next is focusing on optimizing and not maximizing, right? So optimizing to me when it comes to yields is because we have higher input costs, each additional unit I put on is not going to generate as much revenue for me. So I need to look at if I'm, say, reducing some of my nitrogen application to control those costs, I need to be looking at that across the board and optimizing my inputs for potentially a lower yield goal. Next is looking at the fact of shopping around for both your inputs and your services. We need to really control those costs in every way that we can. And that means looking for that opportunity to get a better deal and look for the right product for the right field and getting that locked in by shopping around. And the final one is that cash is king. If we look at farms across the state, we want to look at both their working capital and their current ratio, which is the comparison of your current assets to your current liabilities, and working with your banker as you come into 2022, not only just during loan renewal, but also potentially as we look at the end of the year and doing some prepaying of expenses for the coming year and really working through that opportunity. I would also encourage you to develop a cash flow budget. Right now at the beginning of the season, again, trying to look at where input prices are at and reference this document as you begin to make your purchase decisions. And then as you work through the season, compare the budget to the actual expenses and make adjustments as necessary. So I went through that pretty fast. If you have any questions for me, just kind of on this introductory standpoint, feel free to either put them in the Q&A or in the chat box, and we'll hang on to the end of the webinar and we'll answer some of those questions. But with that, I'm going to pass it over to Aaron Nygren.
Thank you, Jessica. Let me pull up my screen here. So I just wanted to kind of piggyback off of Jessica, especially on the optimizing part. We know there are fields that if we just avoid applications, we are going to lose yield. We're going to lose maybe even more money than we would have spent on fertilizer. So the key there is how do we decide which fields to prioritize and which areas? And I think the biggest tool we have this year is our soil tests. If you have good, accurate soil test data, we can utilize that as a foundation to decide which fields we would need to apply on. A lot of people maybe are in the program of just having a replacement or maybe a build program over time. This is the year, with phosphorus and potassium, some of those double what they were last year. Maybe it's a year more to just kind of focus on the priority fields and maybe skip some of those extra applications that really aren't needed, the ones that really don't give us a return on investment. So once again, get good soil test data, utilize that to really make your decisions. The other thing then going forward is, focusing on those that are going to have us the best return. So when we look at the nutrients that give us the best return on corn, the number one is N. It's going to be expensive to pay that bill, but like Jessica says, we need to invest that money just to get our production there. So yes, we might cut back the rate a little bit, but maybe not as drastically as we think. Next nutrient would be phosphorus. So if we have phosphorus that are coming back low, we're going to have to spend the money on that dry fertilizer. The other big thing that I think is an opportunity in a year like this is to really focus on pH. We do have quite a few fields that have low pHs. So we have acidic soils. Lime hasn't changed that much in price. Trucking has maybe gone up a little bit, but it hasn't gone up nearly as drastically as the other nutrients. So if we wanted to spend some money, maybe if we have some fields that are needing some lime applications, this would be a really good year to get that done. We then move into some of the nutrients that maybe we see responses sometimes, but it's not as likely. So we need to be a little more careful when we're going to make those applications. So potassium would be one. A lot of Nebraska soils have fairly high potassium in our subsoils. However, there are fields that do have responses, and we are starting to see some lower numbers. I know the other thing that's in the back of everyone's mind this year on the agronomic side is we had many areas of the state that pulled off some really good yields. So we know we do have some fairly high crop removal rates. Some fields we may have to look at replacing some of that, but some of these high testing fields we could get by a year and then go back to replacing those in the future. Sulfur would be another one. Sulfur is something we need to look at. We have cleaned up our air pollution, so we don't get the amount of sulfur out of the air that we used to. So that is one nutrient we need to look at more, and then zinc as well. A couple that are lower, we do sometimes see responses, but it might be more specific to soil type, would be your chlorides, your irons. And then we have a lot of the micros that are just really rare of when we've ever really documented yield responses. That doesn't mean it couldn't happen. That might be your one that's limiting you, but really focus on whether you need those or not. So the next one would be on the soybean side. So soybeans, phosphorus again is one that we're going to really look at, and then pH. With pH, soybeans would respond to a lime application sooner than corn on corn. So depending on your rotation, we need to look at that pH. Then we have the moderate ones are iron and potassium. Now iron, we have the Platte Valley yellows. The challenge there is the plant is deficient in iron, but the soil really isn't. It's more of a pH issue with high pH. So there's some fields that are just going to be a challenge always to fix on some of these things. And then we have the lower ones again. There's been some research done on trying to use nitrogen applications to maybe potentially increase high yielding soybean yields. At these dollar, plus a pound prices, that's going to be pretty hard to justify looking at because we've typically seen fairly low responses in those and not really consistent. So some of these things that we try when prices are lower, probably not a good year to try some of those things. So a couple tools that we have to help you out. One is the UNL in calculator. So this calculator was recently revised by Javed, one of our soil specialists. One thing we had to do, we actually had to fix the prices. This would only allow a maximum of $1,200 a ton for anhydrous. I know I've heard up to $1,450 right now, so that was redone. Also just updated some of the information in there as well. The formula itself didn't change though. We're still confident in that formula. So what this allows you to do is look at different prices of fertilizers. So you can put your different programs at the top. You put in your fertilizer price, your application charge. Based on that, then you start plugging in information. The one that's really probably the most critical on here is the yield goal. We need to set a realistic yield goal. Look back at your last 5 years of corn yields, put those in. If there's one that's, for instance, 2012 is one that on dry land a lot of times gets thrown out, right? That was an extremely low yield compared to the average. The ones that we don't usually throw out are the ones that have the really high yield. If we had 40 bushels higher than we've had in the last 10 years, maybe that one should get thrown out as well. So pick an actual realistic number, and then that'll use that for the rest of the calculations. After that, the calculator is fairly simple. Soil texture, your organic matter. So once again, soil test is needed for this. And then if we've sampled for soil nitrates, so that's nitrogen that's already in the ground that should be available next year, depending on our weather. If we get a really wet spring, some of that could be leached past the rooting zone. So there might be value in actually doing some deep sampling next spring just to verify how much you have in the profile, just to double check. Next, we select our previous crop. So the previous crop gives us a legume credit. So on a medium fine textured soil, we'd have a 45-pound credit for soybeans. Next is irrigation. So with most of the state, majority of the state and corn has irrigation, right? We need to be, realistic about use a long-term average of what we pump, account for that nitrogen in the water. I know you never know for sure if you're going to pump or not, but realistically, we're going to typically pump something. So that's credit we could give, especially important in areas that have high nitrates. We can have quite a bit of water or nitrogen just from that irrigation water. Last would be manure then. So we have a credit for manure. Even if you put it on 2 or 3 years ago, there's still going to be a small percent that's mineralizing. So think about those fields that maybe we weren't taking that credit in the past and add that in. Even if it's only 5 or 10 pounds, that might be $10 at the current rate we're going, right? So using that then, the other one then is your expected corn price. So what do you think you're going to be able to sell your corn for? That is included because it uses that corn to nitrogen price ratio and it adjusts up or down. So 8 is where it's equal. It basically doesn't change the rate at all. Some of these prices we're at now, we're down at, I've seen even, run a scenario with a 4. At 4, it dials back the rate quite a bit. We're moving down that yield curve because we're not getting as much yield out of those last couple pounds of nitrogen. So once again, it's hard to look at some of these lower rates that it's saying, but we need to be looking at an economical number. So that is available to download. The new version is available on the CropWatch website, so cropwatch.unl.edu. Just a simple Excel calculator that you can play around, plug with that. If you're interested in something like that and you need some help, feel free to stop in one of the extension offices where we have a Wix crops educator across the state, and we would be more than glad to help you out with that calculator as well. Last then would be phosphorus. So the phosphorus recommendations, these were updated a couple of years ago. So we have some critical levels in there, and we also have 2 different rates depending on if you're corn on corn or corn following soybean. So because that gets a little bit complicated, we do actually have a calculator for that as well. So that calculator, once again, uses your soil test data. You have to know which test the lab is using. It might be a Bray, it might be a Malick. Put that in, select your previous crop. The reason it's asking for previous crop and the grain yield is at lower levels, this actually either goes with a crop removal rate or with what it needs to bring it back up to the critical level. So there's kind of a variation in the formula depending on yield potential there. So that's another tool you can use just to see what should I be applying. One thing I would like to point out on this is that it's giving you a P2O5 rate. P2O5, remember, is a component of the fertilizer. So if we're running something like 1152.0, we need to take this times, divide out to actually get the actual pounds of 1152.0 we're going to run. In addition, we had a series of meetings last week. Nathan Mueller put together a nice handout that compares different university rates. So we have the UNL rate versus K-State, Iowa State, South Dakota State, and then Ward Labs. Oftentimes when we look at university rates, they say, well, UNL seems like it's out of whack compared to what industry is saying or other universities. And this is kind of a nice chart. We go through phosphorus, potassium, and then zinc as well, just to compare what we're saying at different soil test rates compared to what the other universities are. So that's a resource that's available to you. That's on this cap.unl.edu crop inputs/handouts website. So with that, utilize those resources. Like Jessica said, really make sure it's a profitable thing that we're doing this year. Sticker shock is high when prices are at this rate, but we just can't afford not to put on fertilizer on fields that are going to give us a good yield response.
Great, thank you, Aaron. I don't see any questions in the chat yet. So again, if you have questions, if you want to throw them in the chat or the Q&A, we'll make sure that our panelists are able to answer those for you. I'm going to go ahead and toss it over to Glennis. Hi, Glennis.
Hey, Jessica. All right, I am going to try to get this to go up. And let's see. I'm not sure which screen you're seeing.
We're seeing your view. We're seeing the presenter's view and not the full screen.
Okay. This should work. Did it?
Looks great.
Okay. All right. Well, thank you. And thanks, Aaron, for sharing all those great resources that you guys have put together. And again, your comments to kind of kick things off today, Jessica, very valuable information. So I'm an extension educator here on campus and a farm and ranch management analyst in the Department of Ag Economics. And I do statewide work with the crop and livestock budgets and also the custom rates survey. That's a really popular publication. Anyway, wanted to, there's just been a lot of information, sort of a lot of noise about all of this, and we know it's just really, on many folks' minds as to how do you deal with all the things that are going on right now with the higher input costs, but also we've got on the commodity side, higher prices in that regard too. So I think it's really helpful though, and I really want to encourage you this year to take advantage of some of the resources that we have as well when it comes to figuring out cost of production and utilizing our crop budgets and those that we've entered into our new program called the Ag Budget Calculator, or ABC. So I'm going to show you briefly kind of what that looks like. And so I think what in doing a cost of production, utilizing, I guess, doing an enterprise budget, we really kind of help bring things more into focus for you, kind of clear up the picture. You can add some anticipated revenue, take a look at what your cash cost levels are as you project all these inputs in for next year. You project what your yield may be and so on. And so that you can get a pretty good idea of cash costs, economic costs, and so on. So let's see if I can advance my screen. Okay, there we go. So I just remind people, why do we need to know that cost of production? So cost of production, again, is going to be really pretty important. If we've got higher inputs, we've got higher costs, to understand, and be able to make some decisions, in marketing ahead if there's some profit levels as we go along into the 2022 season. Also, again, looking at you can put in some what ifs and so on, and kind of look at what some cost controls, use some of the information Erin's provided, and what do those scenarios look like. And then also, I guess there's going to be some decisions on, what if we would switch what enterprises we're dealing with. If we got different fields, we can maybe switch up some crops. What does that picture look like? And just with an enterprise budget, you can see a lot of those things. I want to remind folks that for years now we've done crop budgets, and this year we've got 84 crop budgets that that we'll be publishing soon, and that represents 15 different crops. So just corn alone, we've got over like 25, 26 different corn budgets, and so there's lots to select from. So you can actually look at what we have sort of projected and download those into our ABC program now, and then go in and make modifications to that. So all of those will be added soon into our Ag Budget Calculator. We do have the 2021 budgets in there now. And other than really, there's a few tweaks, a few things that we need to make, that we made to those for the 2022, especially some of the prices, of course, like diesel price. In 2021, we had $1.50 a gallon. And this year we've upped that to almost $3, $2.82 actually, and then your lube costs on top of that. So if you do use a 2021 budget, you just can make some more some price changes. I've as we've put some of those things together, I just wanted to share with you a couple of our corn budgets. We've got a dry land number 23 corn budget with 145 bushel yield. And you can see I looked back to 2020 as what we're using on fertilizer cost per acre, and 2021, and then now what 2022 looks like. So you can see that was doubled as we projected 2022. And it actually, keep in mind too, we grabbed those prices. We talked to some major suppliers to get some prices on fertilizers and pesticides in October of this year, 2021. And so things have kind of ticked up a little beyond that. So even the prices that we have in our budgets may be quite different for you. And so that's why it's important, I think, to be able to know how to utilize those budgets and modify those for your needs. So I'm just showing you here that we're going from like a 227 cash cost per bushel in 2020 up to 275 in 2022 is what our projections are showing. And then economic cost per bushel from 312 to 369. So what's the difference in economic versus cash? Well, cash just is really all of those cash expenses, and including, it would be a cash rent situation that would be included in that. But the economics, if you own your ground, there's an opportunity cost included, and of course, all your ownership in your machinery and equipment would be included in the economic cost, or the depreciation, opportunity cost, and so on of those. So that's the difference between cash and economic, in that we're figuring ownership costs, opportunity, and depreciation in economic. And then you can look at the irrigated budget. Again, we've got quite a number to select from. This year, our 32 budget from 2021 moved to actually 33 because we added a strip till budget in, and so that replaced our 32. So anyway, it's a 275 bushel yield. You can see how the fertilizer and pesticides costs change. So there we're going from a 202 cash price or cash cost in 2020 up to 258, and then economics from 284 to 348 per bushel. And then I just kind of threw in, I kind of looked back at close to this November 15th USDA daily corn prices. So I've got here in 2020, that was at 423, at 571 here in 2021. And what's it going to be in 2022? Again, if we had that crystal ball, that would be a good thing. But we already have some idea looking at December corn futures into next year, kind of what's happening. So hopefully Cory, as he rounds things out today, can help us kind of think about how the revenue side of this thing how we should deal with that. All right. So I do want to spend just a little bit of time talking about the ABC program, and the link to that is agbudget.unl.edu. So you can go in and you basically just need to create an account. All we need is an email, and then you create your own password. So these are your own accounts where you can go in and download our budgets, or actually start from scratch and develop your crop budgets. You can save those budgets in your account. So as you can re-enter the account with that email and password, and continue to update those, and throughout, so you can get started on them and then update them as you go along. Let's say right now you think the price is this on certain inputs, and what's it going to be a month from now or whatever. You can go in and make some changes as you need to. And then I really like this, that initially it's going to take a little bit of work to kind of get through the 2022 budgets if you're just getting started with this now. But what's really nice about it is once you've created a budget, and let's say you could actually do these field by field if you'd like, or you could do your dryland corn all together, or your irrigated corn, soybeans, all that all just together, as separate enterprises. But once you've done that, it's easy the program is designed so that we can duplicate those budgets. And so once we've got one done, it's easily, updated. So I just took some quick screenshots of our ag budget calculator just to show you that, again, this is the account that we're working on for our 2022 budgets. And there's 84, there'll be 84 different budgets in there. And we usually have them alphabetized so you can easily find the corn budgets and the numbers. We just number them like 1 through 84. And so, this is a managed enterprise part of this program. We've got tabs across the top with drop downs so you can maneuver around and find where you're going in the program, or action items off to the right-hand side of each of those screens. So I just show you that. We've got where you can edit. The little tractor here is to edit operations, and through the operations, I guess I'll show you what a screen looks like on that. And then we've got reports, of course, that you can run, or let's say you are just messing around and want to clean things up, you can always just, dump them into the trash. All right, so field operations. So this is that dryland number 23 corn budget. And so what you would do is you basically think in terms of how do I, how do I produce this crop? What are the procedures, or what are the operations that I do? So it's a no-till budget, start with a burn down. We plant, we apply fertilizer, herbicides. There's some custom work included in some insecticide applications later on, and so on. We harvest and truck the grain. So that's kind of what that looks like. And whenever there's an okay here, that means that you've got all the details into that particular operation to make this thing work. If you see a red ad, that means you're missing something. So the program tells us when we're on track or we're not. So And then just to show you, this is just a partial screen of an operation entry. And we're adding in our labor cost. Like, again, I've got $25 an hour for university labor is what we're using. But you could actually say, this is what I value my labor at. This is what my, my hired person, what I pay them. So if they're doing the operation, you could select them in the drop down and then add them in as your labor. Power units, again, we've got our own equipment in, but you would go in and say, set up your account to show you all of your power units and your implements and what those purchase costs were and so on, so that the depreciation, repairs, fuel efficiency, all of that is working based on the equipment that you have. And then, of course, then with that operation, and I'm showing you here, this is the planting operation. And so we are applying some fertilizer and also, of course, our seed in this operation. So, and then this, to break that down, again, I can select from, I can enter all my inputs and put in the prices. I could go in and change those prices. Someone asked last week, what if I buy fertilizer at this cost and two weeks later it's higher? Well, I would just say enter it, here's the first purchase. So you can put 1034.0 number 1 and then 1034.0 number 2, and you could change and vary those prices. And then here is an example of that. How much do you apply? And this happens to be by gallon. So we apply 6 gallons of that fertilizer and it goes on 100% of the crop. So just wanted to show you kind of what those screens look like. And then the ABC program features, again, the key thing is that you can take what we've entered and customize your enterprise budgets. We really encourage people everybody does things differently and different cropping practices and so on. So it's really important, I think, that you learn how to use this. And again, you can use our information as a guide, but then go in and make those modifications for yourself. As I mentioned, we've got reports, a number of reports, but the cash and the economic cost reports are key. One thing that's different with our new ABC program is there is a revenue section added in, so you can add in your projected revenue for that particular enterprise. We do have a risk module, and I would like to, if I've got time here, to show you kind of what that looks like. And then, of course, overhead, dealing with overhead. It's important, I think, that looking at making sure the costs that are being generated through the program are correct. So we've got a feature in to reconcile those expenses and also add overhead and make sure that your overhead is allocated properly through the different enterprises that you have. And then with that will be in the whole farm section of the ABC program. And then Jessica mentioned the importance of doing a cash flow. So we're building in that feature. That's still yet to come, but we are in the midst of getting that developed right now, so that you enter in all your expenses, and then you should be able to go in and say, okay, yeah, this is when I pay for those expenses, and do a monthly cash flow. And then our next feature to ABC will be to add in the livestock budgeting part of it. So I'm going to switch over here, hopefully, and show you the program. Let me see here. It's always fun to switch. Okay. All right, so do you see, let's see, okay. Do you see the ag budget calculator now?
We do.
Thank you. All right, good. All right, so I just wanted to show you kind of to make one change in this. This is all of our budgets. You can see we're working on our 2022 budgets in ABC right now. But anyway, this corn budget number 23 is the one that I referred to. And the action items, again, off the side, or I'm just going to actually call up this particular budget. And I'm just going to show you how I'm going to change some of those input prices that are in there. Okay, so we just kind of took a look at this picture a little while ago. And I am going to, I think it's in the spray fertilizer, this one right here. I'm going to go in and change that. We have in our budget 72 cents. Again, that was an October price that we received. So let's say, I know we talked earlier about how some of those prices have changed. So, I'm going to go in here, and it's nice that there's some interactive ways to get to things here. You can see what amount was applied. I could change that application if this was my own budget versus the university's. But here I could go in and change that price from, I'm going to put it in $8. That's what we used in some of our examples last week. So again, the name of the product, what it is, the category, purchase price, and the units of measure. Okay. So now I've got that, and this shows where that particular product was used. But I'm going to go back to this 23 budget, and then now I'm at the reports feature. So economics. So in this case, I just increased that fertilizer cost on the economic side of things. And now we see a $3.98 per bushel economic cost, and it was at $3. I didn't show you that earlier, but before we made that change, it was at $3. I'm going to go over here and just look at the cash costs. And so now we are at, we went from, well, we've got $3 now as our cash costs. So we went from $2.79 on cash cost to $3 now. All right. So, and what's really nice about this is we can, there's reports that we can run here, field operations reports. We can look at our different operations, what those costs are, and run a report as such, or we can look at all of our materials and look at what we have in for percentage applied, quantity applied, and the cost per each unit, and so on. So you can look at what we have entered and go in and make changes again to customize yours. So I just, in real brief here, I would like to show you our, let's see if I can find it. Okay, go into the analysis section. We've added in sensitivity and break even, but the risk analysis module I think is of huge interest to a lot of folks. There's a lot of detail here to explain things. But let's say I'm over into Aaron's area and I'm in Saunders County, and I just clicked on Saunders County. Here's that 145. This is a dry land budget, again, that number 23 budget. And let's say the expected yield's 145. NAS average is this in that area. And the regional low really occurred. We've did some background information as we developed this module, but 83 bushels was a regional low back in 2012. So there's information there. So I'm going to go ahead and click on that, and we're looking at a yield exposure. So as the yield changes, what happens to our situation? So let's say our APH, we'll go ahead and put in that 145 is our APH yield. And this year, of course, in February of 2021, that price was established at 458. So again, looking for 2022, we won't have those prices in there until after February, or right after February, we'll update this. But go on down, let's say my disaster yield is maybe not as bad as 83, but I've got 100 bushel. And next year, let's say if we do have things are dry, and I figure like a $6, harvest price, $6, our disaster yield. And then let's say we've got this $6 as our futures, put in a minus 25% on basis, okay? And then go on down, I can actually select what my coverage level would be on insurance. So let's say I was at a 75%, you could see the different levels I could choose there. And we've got the premiums again yet in for the 2021. Those will be updated as we get those figures here eventually too on the premiums for 2022, but you can kind of sort of speculate what those might be. And then we've got our, it shows us here what our revenue would be if we had a yield decline back to 100 bushels. And then I can just actually look at the report. I can look at what this is compared to what I just looked at a while ago. And so here I'm showing economic cost. If my yield is that much low at $5.43, I'm still making I'm still have a positive return because I've covered myself with the insurance revenue added in. So that'd be right up here. So you can run reports kind of on a what if there was disaster, what if things kind of went haywire. And it's really, really important, especially as we think about input prices being higher and the investment that we're making into the crop this next year, to really think about those risk management things that, steps that we need to take with all of that. So anyway, that's just really in brief what our ABC program is all about. We do have a number of training sessions. I might have Ryan put that link into the chat. So if you're interested in ABC and want some help with that, I'm really the person that's kind of leading the way with that. And check out our schedule with all the different training sessions we've got coming up to use ABC. All right, so I'm going to turn it over now back to Cory.
Actually, we do have a question in the chat.
Great.
And the question is, what are enterprise budgets? Is all corn, for example, like an enterprise units for crop insurance? Can your ag budget calculator determine the cost of production by field?
Yes. So yes, you could simply just say, hey, this is, and that's kind of what we've done in our budgets. This is like a quarter. This is, we have 150 acres planted. And so you could divide those out. And so really what it boils down to is just, you can name these budgets however it might be. So my dryland corn on the north quarter, or, it could be on a piece of rented ground, you could name it, on the Jones place or whatever. So you can actually keep track of that. And our whole farm module then will help us bring all of our corn budgets together. So then you can take a look at your overall cost of production for dryland corn or irrigated corn. But, obviously we sell it all as corn. So it's good to know what your overall cost production is for that particular commodity. So good question. Thank you.
All right, Cory.
Yes, good afternoon. Let me share the screen. Am I in presenter mode?
You are not.
How about that?
No, we're seeing your notes
I
and
need
stuff.
to
Swap it.
flop it. No. Let me move it over. Still didn't move it.
You can click at the top and swap your display, switch your displays. Yep, right there.
I knew there was somewhere. There we go.
There you go.
Awesome. Okay. So what we've heard so far, we've laid out the problem, but we've got a lot into tools, but we haven't got back to the logic and the reasoning behind how we make decisions, and what could happen this upcoming year, and staying away from events that we may or may not see. So that's what I'm going to discuss here. As you know, it's going to take more money to plant this year's crop, and the further we climb up that ladder, the farther we can fall off that thing, and that means there's more we can lose. So we need to protect this investment from unforeseen financial shocks, because we're further up the ladder. Okay, so essentially what I'm talking about is thinking about strategies where you're minimizing the probability of experiencing this price cost squeeze by buying high price fertilizer now, not locking in an output price, and then waiting till harvest to see where that ends up. And that thing can, and I'll show you here in a little bit, there's a lot that can happen between now and then, because we have a lot of time. Budgets are your best filter to understand where your profitability is. Inspecting just costs, really gets the emotional roller coaster going, and we have to minimize this emotion in this thing to make good financial decisions on what we'll do this upcoming year. We still have choices. There's a lot of stuff that go on. Aaron indicated a lot of stuff there that can change. I often think about for the farm back home, how can I get rid of farm constraints? Should I be thinking about adding on-farm fertilizer storage to where I'm always have some stock on hand to keep that average price moving in a certain direction? And then of course we could also change crops. to head to the one that has the lowest, let's say, cost structure. It'll be interesting to see how the market reacts to this as we go forward. So with that, quiet markets can awake. I don't know why that is moving. I don't know how I did that, but that was very nice. Quiet markets can awake. And so what we have here is the natural gas market over in Europe. And up until July of 21 or just before it, if you looked at that price series, you'd be like, man, that thing is pretty quiet. And then all of a sudden it shows its true self. And the point here is just because there doesn't look like there's any risk in it doesn't mean there is. It's easy to get complacent when markets are not moving a lot. Okay. See, we have a chat in here. Let me see if that's that's from Glennis. Okay. History can tell us a lot, but it can't quite tell you everything. Here we have the Green Markets Weekly North American Fertilizer Price Index. There's just a couple different things in this, and we can see the run up back in 08 when prices went up. So it's not our first rodeo in this thing, but now we've just eclipsed that thing into new territory. And the point here is when you think you've seen the high, don't be fooled. There's a high somewhere else above that can break that thing away, and it just will take time for us to see that thing. Okay, it takes time, but don't let, just because you haven't seen it doesn't mean it doesn't exist, get in the way of your decision making. And they just froze on me. Are you guys still there, Jessica?
We are still here.
Okay.
There you
Okay.
go.
Oh. Okay, so what about marketing for this upcoming year? We've laid out the price side. Every farmer's at a different stage in their price. Some could have purchased some could have purchased all. The prices come up. Purchases are probably being pulled back a little bit. But either way, wherever you're at on your farm on that price, understand that you're after a margin. And so that margin means you want to stay out of that price cost squeeze. So what can we talk about for the price for this upcoming year? Crop insurance, we don't have much to say right now. We don't know the value because we need to get through that projected price. But based on where December 2022 prices are and the volatility, premiums are going to be up substantially. And I'll come back to this here in a little bit. Premiums can't alone drive your decisions. You have to pay close attention to the guarantee, especially how much that deductible is. Because that relates to your, and you relate that to your production costs, because there's going to be a lot of money being transferred off your books into that insurance book if you maintain a relatively decent coverage level. Don't just look at insurance premiums alone. That alone is going to want to make you pull back, and that pullback on coverage could have a big cost if bad events come around. Hedging. You can always forward crop some contract or forward sell some of your expected crop for next year. Hedging is not intended, though, to get the highest price. I hear this way too much. People get upset about hedging. Rather, hedging insulates you from the financial costs of low prices. Just because you didn't see it doesn't mean it cannot possibly exist. So this last year is a perfect example. Hedging has left a bad taste in people's mouths. That doesn't mean we go forward thinking hedging is bad, because this upcoming year, the fact that we're starting off at higher prices with higher input costs, hedging might become a very good friend as protecting the farm financial situation. Focus on your average price, not the high low of your contract price. Yes, essentially hedging is after an average. Saying you sold something and the price continued to go up 6 months later, You shouldn't have done that. No, that's not the proper logic. You still have more to sell. So move your average price up with it. Follow your average price, not your highs and lows. Let's go to a little bit of price evolution. This is every single corn futures contract back to 1989 from February 1st through December. And the point here I want to make is in the spring, those prices have ranged anywhere in here. And of course, we have a bunch of years pre-ethanol, so we kind of want to discount these guys a little bit because we're up here in this range. But the point is that as we go through the year, that variability grows. There's a lot larger window of where those prices can end up. And these prices, they move around kind of like a drunken sailor. They represent active buyers and sellers in the market. And there's no rhyme or reason why they'll go different ways than others. Let's take a look here at a couple that we're probably fairly familiar with. This green one right here is the 2012 drought. Started off the year trending down, and then the drought hit and these things rocketed up and then stayed up throughout the year. We've seen other years here, this is 2008. Prices moved up substantially into the early summer and then imploded after that. We have 2020, prices kind of hung out fairly flat. Didn't do a whole lot, but a little action there. And then I even have 2004 in here where it things kind of came up and then fell off. So the question is, we're starting off here around 550 somewhere. Where on December contract, where is 2022 December futures contract going? How's it going to evolve throughout the year here? I couldn't tell you, but I can tell you something about the distribution, about where that thing could end up over here. Is it going to be high or low? So let's take a look at that. So there's two pieces of information to do that. You use the futures price and the volatility. So this is the same way the crop insurance does it. And what we have here is a histogram of a whole bunch of draws of prices in the spring going into the fall. So every time that when it goes into the fall and it ends up at a price, and it ends up at that same price again, you're going to get a larger bar on the histogram. So what that means is the market's telling you that it should be, the majority of it will be somewhere around 4 to 650 or something. There's a large area in here that covers that. But the extremes tell you a lot more because there's a chance then that prices could end up sub $4 and sub $3. It's really small, but it exists. And of course, you have your drought possibilities. Man, if we layer a drought onto the current price action we see now, I mean, we could be up over $9, okay, pretty well. But now drought's a rare situation, and there's not a lot of area up here, but it does exist. Okay, it does exist. I'm not as concerned about the drought side. I'm more worried about lopping off these sort of things down here, because buying high-price fertilizer and selling your crop at low prices is a quick way to make your banker not your friend anymore. We want to keep our banker our friend and limit the exposure to these sort of things. And in doing so, of course, you're going to limit the exposure up here, and that's okay. I don't know if we'll see this year, but there definitely is a chance that it can happen. Last slide. Here are my thoughts. As you walk through the logic, as you walk through the logic of decision making this year, there are events that can happen that could drive prices low. We may or may not experience any of these. It does not matter if we do or do not. Insulate yourself from them, because one of these years it will show up. You must give credibility to the chance of rare financially devastating events and the impact on your operation. This isn't, I guessed prices in the spring and I was right, so I get a star. This is you're managing a business, so let's treat it that way and minimize the chance of rare financial devastating events. Do not let past hedging experiences impact your future hedging decisions. I don't mind if it nudges you one way or the other a little bit, but don't wholesale leave it, because this year the economics is completely different, especially with the costs going up. Emphasize achieving goals and objectives by using facts. Get the emotion out of this thing and stick to your goals and objectives. It's not going to be easy to get the high price this year. It could be easier to get put in the price cost squeeze this year, but all that in between where you make some money and you survive this year is a win. And so focus on those goals and objectives and use all the facts you can in making decisions to survive this upcoming year.
Awesome. Thank you, Cory, so much. So we do have just a little bit of time. We will hang on. If you have any questions for our panelists, you are welcome to put those in the Q&A or the chat. So again, Glennis has added some information related to the ag budget calculator into the chat box. And we've also got the handouts related today also were in the chat box as well. So we'll hang on here for just a minute. And if there are any final questions, please go ahead and enter them into either the Q&A or the chat now. Well, I'm not seeing anything come in, so I want to thank you for joining us today. A recording of this webinar will be posted at cap.unl.edu, where you can also register for our other upcoming webinars. Our series will be off next week for the holiday, but we plan to resume December 2nd, so check out cap.unl.edu for updates. And please click the link in the chat box to take a brief 3-question survey to provide feedback about this webinar and inform our upcoming sessions. Thanks again for joining us.